Hey, good morning. Happy Thursday to you. Today is December 6th. I'm Nathan Garcia, and wanted to bring you a quick update here. It's currently 9:05, and cash market opens here at 9:30 in the U.S. on the East Coast. And we've had a lot of overnight news, and I want to bring you up to speed because you may have seen the video that I did on Tuesday following that pretty big move down. And we've gotten some other news since then that is very interesting. Hey, good morning, Amanda. Very interesting in that, we thought that we were going to come to a resolution with China on this trade war. You had positive headlines from the meeting with President Trump and China's President Xi from the G20 summit. And last night, you had Canada arrest and extradite the CFO of Huawei. I don't know if I'm saying that right or not, but anyways, it's significant in that it doesn't look like we are making progress on that front, or maybe this is a negotiating tactic, whatever it may be. The U.S. is asked for extradition because they are alleging that Huawei had violated the Iranian sanctions, and basically by that company trading with Iran, they violated the U.S. sanctions not to do so, and therefore it's punishable. But regardless of the fact, it is complicating matters with the trade war. And overnight we saw futures take a pretty significant dive down. And the reason that this is so significant is that on Monday for the Dow Jones and Tuesday for the S&P, we saw that the longer-term trend lines actually broke. The 50 and the 200-day trend lines were broken. And that matters because those are signals of longer-term trends. And the fact that we broke through those, they're now a sign of resistance, whereas before they were a sign of support. Now, the indices themselves had only broken those trends for the positive to the upside very recently and for a short-term basis. And so now what you've seen is that we've headed the opposite way. Now we're going down. And in addition to that, we're complicating matters with these international politics, the trade war, what have you. But then also, we have global growth concerns with some of the statements that have come out from the Federal Reserve. We see that the price of oil has dropped pretty significantly. The price of copper has dropped pretty significantly. So the growth narrative no longer is there that really supports the expansion in the market. And I think this is significant because we want to take a look at the overall market, stocks and bonds, and look at where the rotation is coming. Are investors moving money out of stocks and into bonds? And if so, what kind of bonds? Because what we saw as well late last week is that we had short-term bond yields invert, which basically means that you're getting paid more money on a short-term basis if you're investing in a 2 or a 5-year note from the U.S. Treasury than you are from a 10 or a 30-year note. And what that signals is that investors are not as confident about longer term growth. And in the past, historically, many times when this has happened, it has resulted in a recession. And so we might be entering a phase here where we're looking at the economy slowing down, and therefore investors may need to become more defensive. Regardless of the fact, I think it's a very interesting day to be paying attention to your portfolio. I'll be watching the bond yields, in particular the 2s and 5s and the 10s and 30s, to see what the relationship there is, and are investors going to be rolling their money into shorter dated or longer dated maturities. But I hope that you find this interesting. If you have any questions, make sure that you reach out if you'd like a review of your portfolio. If you like this video, give me a thumbs up, share it with somebody that you love and appreciate. Thanks.